Hey guys, what is up? Faiz here. In this video, I will teach you the only trading strategy that you need to become profitable. You don't need to watch anything else on YouTube. In fact, you don't even need to watch my future videos, okay? This is basically all you need to become profitable, okay? But before we start, I just want to thank you guys. Thank you so much for 50K subscribers. I did not expect to grow that big on YouTube in such a short amount of time. Okay, all thanks to you guys. I wanted to do a face reveal, but I'll do it in the next video. Okay, anyways, let's get on with the video. So here are the rules, and they are very simple rules, guys. Number one, you have to identify the higher time frame auto flow. What I mean by auto flow is the trend. Okay, identify higher time frame auto flow. Once you do that, the rule number two is mark out POIs. Now, point of interest could be an auto block, could be a fair value gap, could be a breaker block, and whatnot. But I prefer that you stick with auto blocks. Number three, wait for price to come into your POI as a turtle soup pattern, ABC pattern actually. So this is the most important thing that you must keep in your mind. Okay, so when price is coming back into your POI, it must come in the form of turtle soup pattern or ABC pattern. I teach the ABC pattern on my YouTube for absolutely free. You can watch my videos, and you have to watch my videos from the very start, and then you will learn about the ABC pattern in detail. Okay, so let me give you how it's gonna let me show you how it's gonna look like. Okay, so let's assume that you have a auto block right here, right? So when price is coming back into your POI, it must not directly go into your POI like that. Okay, with momentum, it should not. It should create a higher high, higher low, and then another higher high. The second higher high goes into your POI. In other words, you can call this inducement, okay? But I like to call it turtle soup pattern. So you have a liquidity sweep right here, and then you have price coming back into your POI, and that is a A+ setup. Now, here is the catch, okay? Rule number four, wait for market structure shift on lower time frame. So let's say that your POI was on a higher time frame, like 4-hour time frame. Okay, so you're looking at the trend direction. You must look at the trend direction on a higher time frame. Okay, so you must have two time frames for this strategy. Okay, a higher time frame and a lower time frame. So my higher time frame is 4-hour time frame. So you have lower low, lower high, prices continuously making lower low, lower high, lower low, and then you have this POI. Okay, so when price creates this higher high, higher low, higher high, you must turn on your light bulbs. Okay, that is the time that you need to be active on the charts. Now when price comes back into your POI, you drop down to the lower time frame. Okay, so there are two types of market structure shifts. Okay, a high probability market structure shift and a low probability market structure shift. What is a high probability market structure shift? So you have A leg, B leg, and C leg, right? You want to mark out the structure below the A leg high. So this is the A leg high, right? This is the B leg, and then this is the C leg. Okay, so this is the A leg high. You look at the C leg, you're looking at the C leg, you mark out the structure on the C leg that is below the A leg high, and that is going to be somewhere around here. Okay, let's say there's a low right here. You wait for price to break this structure with fair value gap. Okay, so what is a fair value gap? It is a fair value gap that is created before market structure shift. There is a misconception. There are two types of fair value gaps. One is inefficiency, okay, and the other is fair value gap. So let me give you an example about what I mean by this. Okay, so let's say there is a gap here. Okay, now that is not a fair value gap. Why? Because this fair value gap was not created before market structure shift, okay? However, we have a market structure shift here, right? And then anything below this level is a fair value gap. That is the exact definition of fair value gap. If there is a gap here, that is inefficiency, guys. Okay, never mind. Let's get on back with the video. So you have a market structure shift here, and then you essentially take your entry from here and target this level or maybe this level. A low probability market structure is when you are simply looking for a market structure shift when price comes back into your POI on a lower time frame. So let's say price comes back into your POI. There was a structure here, actually here above the A-leg high. Price breaks that structure, comes back into your POI, and that is your entry right there, and boom. The rule number 5 is market structure shift must happen during kill zone hours, and your entry must be during kill zone hours as well. This is, I would say, the most important part of the strategy, okay? Without time, price is nothing. Without time, ICT concepts don't work because we are talking about algorithmic trading. The algorithms are not active when you are not in the kill zone hours, okay? So I've seen a lot of people, what they do is they trade these patterns outside the kill zone hours, and that is the wrong approach, okay? So these are the simple 5 rules that you need to become profitable and quit your job, I would say, within like 30 days. If you are, you know, a normal trader, you are somewhat profitable at the moment, you are at break even or not. But if you are like a beginner, you're gonna need at least 60 to 90 days, okay? Don't watch any other video, just follow these simple rules and kaboom, you have your system. You don't need anything else. I'll give you a secret little tip at the end of this video, but let's move on to the examples now. All right, guys, so here is the example number 1. First of all, we have to look at the higher time frame trend. So if I zoom out, you can see that we are bullish, okay? I do not want to look at here. I want to look at the current price action, and that is we are making higher high, higher low, higher high, okay? And on the internal market structure, we are creating higher high, higher low as well. Okay, so my higher time frame is 15 minute, and my lower time frame is gonna be 1 minute or 2 minute time frame. Okay, so essentially, let's go back here. Okay, so now we know that we are bullish. Now we have to mark out our POI. So this right here is an auto block. Bearish candles. So on a higher time frame, that is going to be 1 candle, okay? These 3 consecutive bearish candles, if you go on a higher time frame, it's going to be 1 candle. Of course, that is like, it makes sense, right? So what we do have now is before price comes back into our POI, we have A leg, B leg, and now if I go back, you can see we have the C leg here. And if I zoom in, you can clearly see that we tapped exactly to the body of this candle. Okay, right there. So let me go back and let's go to 2 minutes, right? And you can see that we have a structure right here. So if price breaks that structure, that is going to be perfect. You can see we have a break of, market structure shift right here during kill zone hours. That is beautiful. And then we have this fair value gap right there. So you can clearly see. So let's see. If price comes back into our POI, it does. Let's go long here, put our stop right below this low here. Let's target this level right there, and let's see how this plays out. And as you can see, our take profit was hit. So that is basically all you need to become profitable. I'm not even kidding, guys. You have to use like the extreme fair value gap for entries, okay? And you want to refine your entry as much as possible. If you want to do that, it's up to you when you are looking for entries. Okay, so let me give you guys another example. All right, guys, so here is the example number 2. So as you can see that we broke this high up here, and that indicates that we might be going up from here. Also, we have been creating higher high, higher low in the internal market structure, giving us a narrative that we could be going up from here. Okay, so as you can see, we had a POI here, POI here. You know, we had this POI here, and you can see we had a reaction over here. But right now, what we do have is this POI right there. So let me mark out the auto block right there. So consecutive bearish candles before price moves to the upside. And on the higher time frame, that is going to be one candle. So that's about it. So let's wait for price to come back into a POI. It happens right there. And let's then drop down to 1 minute time frame. And as you can see, we have a clear market structure shift. However, that is a low probability market structure shift because we did not break the structure above the A leg low, okay, in this example. So now we have a market structure shift during kills on ours. That is perfect. We have a fair value gap right there. So if I play this through and I put my entry right there, stop goes right there. Let's target this level right there, and let's see how this plays out. So price gives you another inducement, and we have our entry, and let's see how price moves from here. And as you can see, price hit our take profit level. So now before I end the video, remember I said that I'm going to give you a secret tip, right? So this is the secret tip. So let me remove this. So you have a market structure shift, right? And once you have a market structure shift on a lower time frame, you wait for price to do a break of structure. So you have a higher high, higher low, higher high. That is a break of structure before your entry. Okay, what it does, it creates an inverse turtle soup pattern. Okay, and remember guys, this is gonna send your trade to sky like this. Okay, because this is very powerful. Remember, when you're looking for market structure shift, you have a market structure shift right here, right? If price comes back into your POI, that's totally fine. That is gonna be that's gonna have a lower probability. I wouldn't say that much, but it's gonna have that lower probability rate. However, once you have like a market structure shift and then a break of structure, which happens right here, you can see, and then price comes back into your POI, your real entry zone, then that's going to push the price way up into the skies, guys. This strategy is all you need to become profitable. Main thing about it is that you need to identify the trend and you are going to be okay. So remember, this is the secret tip. You have a market structure shift and then a break of structure, and then price comes back into your POI. This is liquidity or inducement, whatever you want to call it, or inverse turtle soup or A, B, C, D pattern. You have to decide the name yourself. Before ending the video, I just want to let you guys know that the course update 3.0 is dropping on 10th May. It's going to include a lot of videos, a lot of new videos, and also the new ICT 2023 mentorship trading strategy. So if you are interested, the link is in the description. That is $97 one-time payment, but it is not necessary. You don't have to buy the course or anything. You can just learn everything from my YouTube videos. But if you want to really dig into my strategies and you want to be trading with the community and all, the link is in the description. Anyways, I hope you guys have a good one. Goodbye. Nope, that wasn't necessary. I mean, it was necessary though, because 50K subscribers, man. You guys deserve it.